Hi, welcome back to the Whitaker-Myers Wealth Managers Question of the Week video series, where we empower you with the knowledge you need to succeed in your personal finances. I'm John Mark Young, and today we're answering a question that can save you a significant amount of money when you are selling your property. Now, what type of property might you be selling? Maybe your personal residence, maybe a rental property that you own. But to sell your real estate without paying taxes, you can use things such as the Section 121 and the Section 1031 of the Internal Revenue Code to accomplish a tax-free transfer. Today's question comes from Susan in Solon, Ohio, and she asked, John Mark, my husband and I are selling a property we have owned for the last 20 years, and it will sell at a significant gain. Is there anything we can do to avoid paying taxes on such a large transaction? Well, Susan, this is a great question, and we, Whitaker-Myers, are left wondering a bit on this question. We're left wondering, is this a primary residence that you're selling, or is it a rental property or some sort of commercial building that you and your husband own, maybe for a small business that you're selling? Because we really don't have clarity from Susan on this question, I'm going to answer it from both perspectives, as if she were selling a personal residence using the Section 121 of the tax code, and using Section 1031 if she were selling a commercial or rental property. Now, first, let's talk about Section 121, also known as the home sale exclusion. This section allows you to exclude up to $250,000 of capital gains from the sale of your primary residence if you're a single tax filer, or up to $500,000 if you're a married filing joint tax filer. Now, to qualify, there's just a couple rules you have to follow. So let's talk through those rules very quickly here. The first of which is you must have owned the home for at least 2 years within the 5-year period before the sale. So you must have owned the home for at least 2 years within the 5-year period before the sale. The second thing you have to make sure you follow is you must have lived in the home as your primary residence to claim the 121 for at least 2 years within that same 5-year period of time. Number 3, if you haven't claimed the exclusion on another home in the last 2 years, then you're approved to do this. And that's it. If you meet these criteria, you can potentially exclude a substantial amount of your profit from being taxed when you sell your personal residence. One thing to keep in mind, if you don't meet these criteria, there is an exception, and those exceptions are a change of employment that required a move, a change in health, or other unforeseen circumstances, and there's a calculation one must do to determine how much of the $250,000 or the $500,000 you can use to avoid capital gains tax. Next, let's move on to the Section 1031, commonly known as the 1031 exchange or like-kind exchange. This section is incredibly powerful for real estate investors because it allows you to defer paying capital gains taxes on an investment property when it's sold, as long as you reinvest the proceeds into a similar or like-kind property. Now, there's some key steps involved in a 1031 exchange that you must follow as well, just like a 121, and we'll talk through those very quickly here. The first thing is, when you sell your current property, and really before the sale, you must identify a qualified intermediary, have them picked out and ready to go, because they're going to be the ones that actually hold the funds in escrow until you've found and closed on the property you're going to exchange into. A qualified intermediary. You cannot take possession of the funds, or this whole transaction will be disqualified. The qualified intermediary, by the way, is not your friend or your real estate broker. These are companies that actually do this for a living. So talk to your financial advisor to have them help you locate a qualified intermediary today. The second thing you need to do is identify a like-kind property within 45 days of selling your current property. So you have to find the new property you're going to buy within 45 days of selling your current property. The third thing, complete the purchase of the new property within 180 days of the actual sale or the tax filing deadline. 4, ensure that both properties are held for productive use in a trade, business, or for investment. By doing this, you can defer paying capital gains taxes indefinitely as long as you keep investing and reinvesting in like-kind properties. So to recap, Section 121 allows you to exclude up to $250,000 for single filers or $500,000 for married filing joint filers of capital gains from the sale of your primary residence, while Section 1031 enables you to defer paying capital gain taxes on investment properties by reinvesting in like-kind properties. Utilizing these sections can be a game changer in your real estate journey and your tax-paying journey. One final solution we'll mention is that when a person wants to go from a self-managed property into a more passive real estate investment strategy, think of it almost as a mutual fund holding real estate that a professional group is managing for you, so you lose the issues with tenants, toilets, and termites. That can also be done through what is called a Delaware statutory trust using the 1031 exchange laws. That may be beyond the scope of this video, but something you can certainly talk to your financial advisor or planner about, or read the article we wrote about it on whitakerwealth.com. Now remember, real estate transactions can be complex, so it's always a great idea to consult with a tax professional or a real estate attorney to ensure that you're making the most of these tax benefits, the 121 and the 1031. And if you found this video helpful, would you do us a favor? You can do us a favor by hitting the like button, which helps push our content out to more people on YouTube and Rumble. And you can hit the subscribe button, so as we push content out to you, you can access it as we release it. Thanks so much for watching this video, and we'll look forward to seeing you next week.